Is a relief rally coming in the S&P? Hi, it's Charlie giving you Wednesday's video, and I'm recording this Tuesday night because I'm going to be out all day Wednesday and right through that CPI inflation figure. So, are those inflation reports going to benefit the stock market tomorrow and onwards from there? So, it's expected that the inflation figures will be lower than, certainly they're going to come down from the previous CPI release. So inflation is expected to come down. It's then just a case of whether it comes down as per expectations, or it exceeds them and has come down further, or doesn't. So that's the answer there. Now, if I bring the pen up, if the market doesn't exceed those if the figures come in less than expected, so lower inflation, then lower inflation should see a bounce in the S&P and in the stock markets. Okay, so you should get a bit of a relief. Markets should see it as a bit of relief if inflation has come lower than expected. However, if inflation beats the expectation, it comes in stronger than the expectations, then we could see another leg down here. So do look out for those inflation figures out at 1 o'clock tomorrow. However, I'm going to just go into a little bit more here, because even if the market does bounce tomorrow, the stock markets do bounce. So if I now take us out to maybe a monthly chart, even if we do get a bounce, and this is putting into perspective what's going on here with the S&P, and really if you get a real really good perspective by coming out to a monthly chart here, and these are the lows of March 2020, and these are the highs from the beginning of this year. So putting it into context of just the last 2 years, where the S&P over doubled in value just in those 2 years, just in that period there, then we haven't even done I'm not a Fibonacci person particularly, but if you've got a really straight run, then I'll pop some fibs on, and we have yet to even do a 38% retracement, which comes in just above, fun enough, 3,800 over here on the scale. So it comes in just a bit above that. So even if we do bounce in the near term, the scope is there for the stock market to come down and test that 3,800 area, the 38% retracement of this move, this very clean move from March 2020 to January 2022. So the way that I'm looking at this, and that you should at least consider this, is that yes, there's a lot of negative sentiment, bearishness out there in the market at the moment generally, and normally that's a good sign for stocks. But what we've got is a problem there, is that we've got negative sentiment, but we haven't seen complete capitulation as far as people offloading their portfolios. So how they're feeling versus what they're doing are two slightly different things at the moment. So yes, there's selling going on, but not amongst the masses, and we would want to see that going on amongst the masses as well. So the scope from a sentiment perspective is still there for the market to come down. Obviously, no markets go down in a straight line, but from a technical perspective, if we were just looking at this over the long term here, then and just using something like a Fibonacci retracement level, then 3,800 is still a potential. Now 3,800, I believe by the time we get down to there, that would put the S&P pretty much in a bear market, because a 20% correction is then considered a bear market. Beyond that, I can talk about that. I talk about that stuff with our members, but it's just a consideration there for the stock market. So coming into tomorrow, if we take this back to the daily charts, the S&Ps, they did go lower during the day earlier today. Looks like I'm recording this at 25 to 9, so we've only got 25 minutes to the close of the cash market, and we're just sitting around about pretty much where the open is. So if I take this to cash market, I can't remember if I've even got the cash market here. It's a delayed cash market. Yeah, there we go. So this is the actual cash market here, and it's slightly up from where we closed yesterday. That's on the cash market. I tend to use the futures here. I prefer looking at the futures charts, and so relatively flat on the day, but we still got 25 minutes to go, and the S&P can certainly bounce quite hard. So do watch out for that inflation report out there at lunchtime UK tomorrow. It's at 1:30 tomorrow, because that should produce a bit of volatility, not just in the stock markets here, but also movement there in currency land as well. So do watch out for that. But overall, even if we do get a bounce here in the near term, what's the market going to be considering? Just one final thought here. Let's say inflation comes down. So inflation comes down comes down further than expected. Well, the market may cheer that information, but nevertheless, the Fed are still hiking interest rates, and there's still quantitative tightening going on. So at some point further down the line, 6 months' time or so, it's possible that the US economy heads into at least a mild recession. And so the market is a forward discounting mechanism, and so we could find that a short-term cheer in the stock market is met by those longer-term fears of still a recession to come. So it's just something to consider there with regards to those stock markets. So yes, we might get a bounce tomorrow if those figures come in better and lower inflation. So lower inflation than forecast. The forecast is already for lower CPI anyway at 0.2%. If we came lower than that, then we could then see a stock market rally. If we don't, and those inflation figures still come in stronger than forecast, then unfortunately we could see that S&P and stock market heading lower. So that's the general vibe there for the market going into CPI inflation figures tomorrow. Stay safely out there. What? Stay safe even out there.